and then how the details are posted to accounts in the general ledger. We do not have to look back too far to find that once all the bookkeeping was done by manual recording. Computer software is still relatively new for accounting. Manual bookkeeping meant that each transaction was first recorded in a journal. After the transaction was recorded in the journal, the next step was to post the effects of the transaction into the accounts held in the general ledger. It is important to remember that when first looking at the double entry system, we looked at the dual effect of the business on any transaction. The procedure was to identify the two effects, determine which accounts were affected, and then to decide whether the entry for each account would be a debit or a credit. We call this analysing the transaction. Try to think of a journal as being the place where this analysis is first recorded clearly in the accounts. Before we can make an entry to a journal, we need information about transactions. So where does this information come from? All information that is entered into the journal comes from what are called source documents. In fact, no entry should be made to a journal without there is a source document that can be linked to that entry. So what do we mean by a source document? When we make a sale on credit, we send out an invoice to the customer. A copy of this invoice represents a source document. From this invoice, we can determine which two accounts are affected and the amounts to be placed as debits or credits to the accounts. When we receive an invoice from a supplier, then a similar entry can be made identifying accounts, the amounts involved and whether the entries are debits or credits. It is important to be able to recognise these source documents. Receipts from cash sales or cash purchases are source documents. Copies of cheques, or sometimes cheque stubs, are source documents to show payments made. Bank statements will be source documents where they provide details of bank charges or interest added to an account. When entries are made for showing depreciation, there should be a document that shows how this was done. Some accounting software can be set up to show the method and make calculations, but there should still be an initial document that records a decision on the method for depreciation. As you progress in your accounting career, you will come to appreciate the importance of this very first step in accounting, linking source documents to journal entries and keeping clear records so that you provide an audit trail. Times are changing with more transactions being carried out online. It is important that you recognise that the source document might now be an email or an attachment to an email. In the past, the source documents were kept as hard copy. But if the source documents are being kept electronically, it is important to make sure that there are really good backup systems for security in the event of any loss of files. Our journal then will contain a list of the analysed transactions. Any place where the first entry is made to the accounts is called an original book of entry. The first book that you meet is the journal. So what is the format or the layout for a journal? All journals should have at least 5 columns. These 5 columns will hold essential information. The first column should show the date. This is the date the entry is made to the journal. Where the date on the source document is different from the date on which information is entered to the journal, then the date entry is the one that is the date of entry to the journal. So why is this? Well, it's because this means then that all entries to the journal are kept in chronological order. The second column contains the narrative or description. Usually this is the account name, but after entering the accounts there is often a short statement that identifies the source document for the transaction. The posting column shows the account reference. This allows anyone to trace the place in the general ledger where they will find this line of the journal recorded. And the final 2 columns are for entering the actual amount as debits or credits for a transaction. Now let us see how information from a transaction is entered. The first entry is often an initial investment. Suppose Liam starts his business by investing $200,000. The source document here is likely to be a deposit slip and probably also has a note to indicate that this was the initial investment. We carry out our analysis in the usual way. What has happened? The business has gained an asset of $200,000. Liam has an interest in the business of $200,000. The accounts affected are cash at bank and capital. The debit is to the bank since this is an asset account and the asset has increased. The credit is to capital, which has also increased, and the amount is $200,000. Let's have a second transaction here. Liam buys a Ford F-150 for $35,000. His source document will be the receipt he receives from the dealer with the breakdown of costs. We're only interested in any payment for the vehicle here, not in any charges for vehicle road taxes. Our asset of vehicles has increased. Our asset of cash has decreased. The accounts involved are vehicles and bank. To increase the vehicle asset, we debit $35,000. To decrease the bank asset, we credit $35,000. It is really quite easy. The next step is posting to accounts. In a small business, these entries and postings may be done once a week. In a larger business, they would be done daily. In corporations, there are often large numbers of clerks who spend their day entering data from source documents. Your career in accounting will probably be different, but it is still very important to understand how these first postings are made. Just as the journal had a definite layout, so does the form for an account. Again, the first column will be for date and the second for a narrative or description. The remaining columns are for amounts. Note the use of an additional column here for keeping a running balance. Some businesses may only use 2 columns and determine the balance at the end of an accounting period. Accounting software is usually configured so that it will always provide a running balance. So let's go back to the journal and post our first transaction. This was the initial investment from Liam, which we recorded in our journal. We debit the bank account with $200,000. Note that we show date, a narrative, the amount in the debit column and the running balance. You will often come across additional columns. Sometimes there is a separate column used to record a source document reference. There may also be a column to refer back to the page of the journal where the entry was made. Then an entry is made to the capital account, which will be a credit for $200,000. Now that we have made our entries to the accounts, we can return and complete the entry to the general journal showing where the entries were posted to. In our example, we have just shown the account number, but if the account consisted of a large number of pages, we might also want to include the page number here. Now we can post the second transaction. Remember, the journal entry shows the amount to post to vehicles and bank, which is a debit and which is a credit. So we debit vehicles with $35,000. Then we credit bank with $35,000. Note the bank balance now has 2 entries and that we have calculated our running balance after each entry. Finally, let's put in the posting reference for this second transaction. So we return to the journal and add the account references. This ends our session on entering the transactions to a journal and then posting to the accounts. Thank you for watching and for listening.